Hey everyone, Dan here. Before we get into it, if you enjoy these videos, please hit the like and subscribe button. It helps a lot. And also keep in mind that these are my own thoughts, opinions, and ideas. These are not meant to be, nor should you take them as, investment or trading advice in any way, shape, or form. Do your own due diligence, put in the work for yourself, and make your decisions based on that. Enjoy. All right, everyone, so we're about 40 minutes after market close on Thursday, August 12th. We're going to take our daily look at SoFi, and earnings are out. Now, we'll go through the earnings in a minute. There's not a lot to look at on the chart except for like 1 or 2 points, and then we'll flip over to earnings, and then I'll sort of like give my take. Now, keep in mind, earnings just came out. I had a chance to look through it fairly quickly, but I have to get this video out because I have to go spend time with the kids. And so, just bear in mind that you should take a look at it yourself and just kind of parse through it when you have some time and understand what's there. I'm going to give my best reaction by just having looked at it very quickly, but sometimes they can be a bit confusing, as I'm sure you're aware. So SoFi was having a nice run up today, as I'm sure you know, and then earnings came out and we have just been getting crushed, down over 13% at the moment. Now I'm hoping that with the earnings call that's coming up here in about 10-15 minutes, that actually helps subside some of the selling pressure, and that there's some positive information that comes out of that has some folks saying, okay, I'll buy this in the 15s. But this obviously sets us back a couple of weeks, right? This puts us back in the same territory we were here around August 3rd. And the only thing I wanted to mention really on the chart was that this is putting us very, very close at the moment to my purple bounce zone. Now I know some folks will rail against the validity of any charting in the face of earnings, and especially in the face of earnings that are being seen as a bad sign by institutions, by Wall Street. But I would still look for this purple zone to put up a fight, if not provide us some bounce support. So that's what I'm looking for at the moment. I don't know if it will, but it has in the past. And yes, this is sort of different territory with earnings just out. But as we see here, it has continued to bounce out of that zone. Now, it hasn't been in the face of anything like earnings that are being seen as are being taken as a negative sign, but we'll see how it holds up. And then below that, obviously that 1465 red zone that I have that would provide additional support. So we'll just kind of see what happens. Indicators obviously are going to be all out of whack at the moment, so we'll have to kind of take a fresh look at them tomorrow and see where they're at that time, and see how much bullish momentum this peeled off, and if there is still sort of like any bullish sentiment left that has been sort of wound up from all of this running up recently. So we'll see, and we'll know soon enough. But my next biggest hope is for the earnings call. By the time you're watching this, that earnings call would have already happened. So if there is any bounce back at all, I don't think we'll be going green, but if there is any at least subsiding of how steep the sell-off is at the moment, I would suspect that it's going to be because of anything that comes out of that earnings call, and or anything that comes later tonight or tomorrow from some third party, some talking head that kind of puts this in a light that is seen as potentially more positive. Now, to go through this again, I haven't had much time to look at it, so I'm just going to go over quickly and look at things that I think are of importance. Total year-over-year member growth of 113% accelerated for the 8th consecutive quarter to 2.6 million. So that's pretty solid. Still is a very, very small number. I was hoping to see it be definitely out of the 2 millions. So to me, yesterday in that video, we had talked about member growth being one of the key features that I'd be looking for from this earnings report, be that positive or negative. And I didn't stick a number on it then, but I was certainly hoping for us to be out of the 2 millions, and we're certainly got a long way to go. But it is still increasing. Total products of 3.7 million up from, sorry, that's just weirded wordly to me. Total products of 3.7 million, up 123% year over year. So that's a good stat in my opinion. Record quarterly net revenue up 101% year over year. and adjusted net revenue up 74% year over year. So to me, those are good stats as well. Now, to get in a little bit to the nitty gritty, this is a note from Nodo. We exceeded our financial expectations, delivering record adjusted quarterly net revenue and our fourth consecutive quarter of positive adjusted EBITDA. We drove our eighth, okay, these are just numbers that we just said. Increased our Galileo account base to nearly 79 million and raised nearly 2 billion in our successful transition. Okay, so that's just them raising money to be able to go public. Total GAAP net revenue. GAAP is just an accounting method. I think it's generally accepted accounting practices, I think is the acronym. Net revenue of $231.3 million in the second quarter of 2021 was up 101% from the corresponding prior year period. On an adjusted basis, net revenue for the second quarter of 2021 was $237.2 million, a record high and 74% higher than the last year's second quarter total of $136.3 million. Strength in all three of SoFi's business segments, which we went over in last night's video, drove the growth in these measures. So right here, to me, this opening paragraph, these are all signs of a really positive earnings report. So let's get into some things. I mean, somewhere down here, we got to hit some things that are seen not as positive, right? 165.3 million net loss for the second quarter of 2021. So that's a lot of money to lose in a quarter compared to a net income. Okay, so there's the big flip, right? Net loss in this quarter versus a net income of 7.8 million in last year's second quarter. And here they're talking about this. I need to look more into because I'm not quite sure that I'm reading this correctly. Basically, deferred tax liabilities recognized in connection with our acquisition of Galileo, which decreased the valuation allowance by 99.8 million. The absence of that tax benefit, together with the significant non-cash stock-based compensation expenses and fair value changes in warrants primarily related to the fair market value of SoFi stock, were the largest contributions to the current period net loss. So these things have a bunch to do with them going public. In my initial reading of this, now the question that I have around this note on Galileo is, because they had this tax benefits, I guess, that they had sort of allowed them to be positive last year. I'm trying to figure out, reading this, if this should be then seen as we are taking a one-time hit here because there's no longer that benefit in place, and that somehow is reducing the net income, or if it was a one-time benefit that was seen last year that allowed it to be positive, but looking forward, it should be expected to continue with net losses, even though, of course, you would expect those to be shrinking over quarters and over years, but that this being net positive was actually the outlier versus this one being net negative is the outlier. So I need to look into that a little bit more. It might be clarified on the call. I'm sure a bunch of folks will come out and clarify it. Maybe some folks in the comment can even clarify it and say, Dan, you idiot, it means this. And feel free to do that. I don't care, as long as we get the right info out there. But that's the biggest thing I'm trying to figure out at the moment. If it is a one-time situation, it's a one-time situation in which direction? Is this just a fluke one-time loss because of the tax benefit going away, or it was a one-time situation where we were positive because of that? So something to look at there. Second quarter adjusted EBITDA of 11.2 million was positive for the fourth consecutive quarter and 35 million higher than the second quarter of 2020. So that, to me, those are good signs. Due to the combination of higher revenues across the business segments, partially offset by increased spending, that is a way to put it. I'll say that, to achieve incremental growth. So, yeah, to me, the spend very much outsizing. I mean, my knee-jerk to this is the spend is a lot higher than I would like for the results, meaning that's jump up to, 2.6 million users. I would have liked to have seen that be much, much higher for the spend that's going out. Shoot, I don't know where it was at this point, but for however many users we ended up with, the spend being what it was, I would have liked it to be either spend less or have that growth be a lot more, which even just regardless of what the spend was, I would have liked that 2.6 million to be much, much higher. So members grew 113%, 1.2 million at the same point last year. Yeah. Products grew 123% to 3.7 million at quarter end compared to 1.6 million at the same point last year. Okay, member-based products. More than tripled the number of financial service segment products and nearly nearly 2.7 million, up from approximately 783,000. Okay. So to me, if you extract out of it the spend that was required in order to accomplish this member growth, for example, this paragraph to me seems generally positive. So right now, in my mind, there's sort of just like one or two paragraphs that are questionable slash definitely disappointing. And so to me, this is still not as catastrophic as the response is being. So again, I'm hoping that the call can shed some light and save some of this. Lending segments results, net revenue is 166.3 basis and 172 adjusted for the second quarter. Okay, so these increased by 73% and 47% respectively year over year, driven by higher origination volume. Okay, so these are all good signs. Lending segment profit increased 80% year over year. I mean, if these accelerations can continue, I think that it's, we get into a good spot. It's going to be a painful path to get there. And they're in the trickiest situation right now where they have to execute on building and growing a bunch of these things and making vision come into reality, and then dealing with reporting these things out very publicly in what is very much still a growth stage of their company. And that can just be a really, really tricky tightrope to walk. Second quarter 21 total origination increased 66%. Okay, so to me, these are all really good numbers. Despite the various headwinds, SoFi has continued its trend of expanding its set of product offerings. I wonder what the various headwinds that they're talking about are. SoFi this year, rate match guarantee. Oh, okay. All right, so they're just talking about improvements that they've made. Financial services, segment results. Net revenue of 17 million compares to 2.4 million. So this is a really positive sign. Again, I would like to see these three segments start to move toward each other and contribute more equally to the business, so it's not such an outsized reliance on the lending segment. Second quarter segment contribution loss of 24.7 million, improved by 6.1 million. Okay. Revenue growth of 14.6 million, fueled by strength, offset the 8.5 million year over year increase. Okay. Okay. All right. Well, we'll take a look. Okay. So here, Galileo is increasingly expanding into non-financial sectors as well. Over the past year, Galileo more than doubled its member accounts. Okay. Last year. Okay. Total net revenue 45.3 million second quarter of 2020 was up 138% year on year, which reflects a full quarter of operations in 2021 compared. Okay. Has used the first year since acquisition, future growth, blah blah blah. Okay, so they're spending a lot of money, and they're trying to make these things relatively sort out. Second quarter just exceeded quarterly guidance. To 200 by 10%, the low end. Yeah, the EPS miss is the most alarming thing. But again, I'm hoping that the call can sort a bunch of that stuff out and at least make us, I don't know, closer to single digits in the red versus 20% in the red. But, we'll see how well these things come out in the call. Because to me, this generally seems either sort of like not that surprising or relatively positive, and at least in line with what expectations were. I'm a little disappointed in the member growth. Obviously, the big elephant in the room, I guess, is the situation around right here. 165.3 million net loss compared to 7.8 million net income last year's second quarter. So that to me is the biggest elephant in the room here. Other than that, I would have liked to seen overall growth generally be higher. Maybe not necessarily from revenues perspective. I would need to look a little bit harder at that, but certainly from member growth perspective, maybe even, I don't trust myself not going back and looking, but maybe even from the Galileo perspective, I would have looked for or hoped for higher increases there as well. But to me, yeah, I don't know. My reaction to this at the moment, again, without hearing the call and just having looked at this very, very quickly and not having had time to hear other people's opinions about it or digest it in any way or make sure that the things that I think I'm reading are accurate, it feels relatively in line. Some up, some down, nothing catastrophically down. Certainly a disappointment here, but to me that just sort of like raises my antenna for Q3 and see what happens then. That, you know, sort of figuring out which was the outlier here. Is the loss the outlier or was the gain the outlier? And everything else seems kind of on par to me. So it's always been a wild ride with IPOE and SoFi. And so to me, this is a setback, but I don't know. Let's see how things feel tomorrow. But at the moment, I'm really just kind of feeling like hopefully we can chill a little bit on how down this is and kind of recalibrate maybe tomorrow. But if not, start recalibrating next week and kind of see what's happening. Still, is the bank charter looming in the imminent future? And kind of go from there. But I'll be interested to see how Noto and team are able to do on the call, and if they're able to, you know, sort of highlight the positives here, because to me this opening statement that we see is, you know, obviously trying to shed a bunch of light, not transparency wise, but in terms of like shed a bunch of positive light on what's going on at SoFi. So the degree to which they can really amplify that in the call might help quell concerns around this loss. And who knows, maybe they'll even speak to something about how some of these metrics can reach higher stats in the coming quarters, especially around, you know, members and their ability to cross-sell and things like that, and Galileo. So all right, well, I would normally say I hope you had a good trading day. I'm sure it's, you know, has a little bit of a dark cloud over it at the moment, but hopefully if you did watch last night's video, you put your risk in order and you didn't over risk and you knew what you were holding and why, and you were at peace with that, because like we said, this thing could happen. And obviously the sentiment that the overall market at the moment is having is not the sentiment that I have, at least initially reading this. Also, I should have done this much earlier in the video, but there have been a bunch of large-scale orders coming in recent days. Now, this doesn't necessarily mean a bunch of anything, but there are filings coming out tomorrow, because it's Friday, for institutional purchases. So we could or we should see a bunch of info coming from that, and that could clarify if there have been, you know, some increases in institutional buying, institutional holdings, and the 13F filings will, you know, kind of help us to follow the breadcrumbs there as we try to figure out what's going on with institutional money. All right, well, I hope that you're enjoying the earnings call, and I appreciate you watching, and I will see you in the next video.